Hello and welcome to the Review. I'm Andrew Riddle coming to you from very hot and very sunny Orlando, Florida. Due to some technical difficulties, we missed last week's video, so we didn't get a chance to talk very much about the iPhone. Of course, Apple had its launch party 2 weeks ago and revealed an iPhone 8, which is a whole lot like an iPhone 7 but with wireless charging, and an iPhone 10, which they claim will be a game changer, and hopefully it will, though it certainly has a game-changing price of $1,000. So will it sell in droves? Will all of us that have been waiting to upgrade go buy the iPhone 10? Only time will tell. A lot of analysts are skeptical. Personally, I think they will. I think the way phones are financed for most people now, I don't think the price, at least in the US, is a real big deal. But we'll see. One thing that probably is for sure is with the delay in production of the iPhone 10, it's going to be a weak fourth quarter of sales for Apple, which potentially could give us a buying opportunity. So we're looking very closely at that. Apple always does this sort of thing where it runs up before the event and then sells off afterwards. We saw it this time. Apple was trading something over $160 going into the launch event. It's down around $150 now. And we're keeping a close eye on it. We'd love to see it pull back a little bit more, and we'd love to maybe find a buying opportunity in there. So we'll see. But the iPhone 10 will certainly be exciting. It'll be fun to get our hands on one and see what we really think of it, and see what people really think of it, and how big a seller it can really be. Big news from last week was meeting of the Federal Reserve. Last week, the Fed outlined their plans to shrink their monumental balance sheet. Of course, during quantitative easing, they were buying bonds and bonds and bonds, and now they want to begin unwinding that balance sheet of stuff. And the plan, according to the Fed, is starting in the fourth quarter of this year, they're going to start unwinding $10 billion a month worth of bonds. That number will go up by an additional $10 billion every quarter until it reaches a maximum of $50 billion a month. And that's the plan for unloading the balance sheet. They tell us that this schedule is set in stone, barring some, quote, to use their words, sufficiently great economic threat. Not sure what that would be. Another stock market crash or perhaps a recession could get them to stop. But clearly they're going to try and undo so much of what they did to try to at least jumpstart the economy or the stock market post-2008. We continue to see gyrations in the housing market. In August, existing home sales fell for the fourth time in 5 months and brought the adjusted annual pace of sales of existing homes down to a 12-month low. So buyers are clearly cooling on buying existing homes. Why exactly is that? National Association of Realtors suggests that the median home price has gotten too high, up around $235,000 now. But it seems like a more obvious problem is supply has simply gotten too low. And if we look at the other side of the coin in housing, which is starts and building permits, that would seem to bear that out. Permits were up in August 5.7% and continuing a surge of housing permits over the last 12 months. I don't know if you can hear it in the background, but even here in Reunion Resort, which is where we are in Orlando, which has largely been dormant for years, they're beginning to build again, right back there across the street. They're building 2 houses. As for the markets last week, pretty quiet week in the markets. It's been a pretty quiet September, frankly, unusually so. September is usually a very soft month, usually not a lot of news, but usually the market is pretty weak, and September hasn't been so bad this time around. Last week, the Dow was up about 1/3%, the S&P up just about 0.8%, and the NASDAQ pulled back about 1/3%. Today, Monday, we are having a rough day in the market. Looks like tensions with North Korea are probably the driver there. At least so far, that's always been a very short-term sort of a thing, a 1 or 2 day sort of pullback, and that's that. We haven't seen anything sustained from that sort of geopolitical stuff, so probably not this time either, but we'll see. So thanks for tuning in. We'll catch up with you next week, and of course next week we'll start getting us into earnings season again, which is always fun. So we'll catch you next time. Thanks.